Your next guest says her clients are not panicking, and they're looking to the Federal Reserve maybe to help keep a floor into this market, but with more coronavirus cases every day and the real threat of a major economic slowdown ahead, how optimistic can you be really right now? Joining us is Mandy Xu. She is Chief Equity Derivative Strategist at Credit Suisse. Mandy, welcome. No panic. Good. What are you advising, though, your clients to do?
So I think what surprised a lot of people is that despite measures of volatility reaching post-crisis highs, if you just take a look at the VIX index, other measures in the option market are actually signaling, I wouldn't say calm, but certainly no panic. And that's backed up by the flow that we're seeing from the institutional clients, where what we're seeing is they're monetizing some hedges, they're resetting hedges, but they're not panicked, they're not grabbing for new hedges. And that to me is a constructive sign.
Can you explain what monetizing their hedges mean for? I mean, are they rolling out essentially things that are working? Obviously, the deltas. I'm getting really actually wonky myself.
No, we are. Listen,
can you explain this?
It's okay. You know what? It's okay because I feel like we're all sort of helping viewers understand that there's a lot of stuff that goes on in this market, Tim. That's not just let's buy this ETF. This is the mechanics of the stuff that the pros like you guys deal with every day, and I think it's important.
Sure. So monetization means they're selling out of their existing hedges and not buying any more. So basically, they're calling a bottom here. We're seeing some of that, but the majority of it is resetting of hedges, which is what you're talking about, rolling them down. So maintaining the same exposure, but given how much the market has moved, they're rolling the strikes further down. So buying put spreads that are further down given the market move.
And in terms of sectors, do you see them going after certain parts? And, you know, we obviously know which sectors have been the big laggards and, in fact, the ones that frankly look like the credit issues are significant. What are you seeing there?
Sure. So, I mean, I think part of the reason why institutional investors have actually held up okay so far this year is that a lot of them since the beginning of the year have been adding to shorts, and those shorts have been concentrated in the value and cyclical sectors. What are they? Energy, financials, right? And exactly, and those obviously have sold out a lot more, and that has really helped out investors in terms of performance.
Mandy, we rarely see the VIX hang around 40 for any even days, right? So, where do you think it's going?
I think in the near term, we're probably likely to see continued volatility, just given this macro environment, this headline-driven environment. One point I would like to make on the VIX is that even though it's very, very elevated at 40 plus to 50, it's actually trading below what the market is realizing in terms of realized volatility. So VIX at 40 to 50 is implying an average daily move in the S&P about 3%. We're getting 4 to 5% daily moves for the past 2 weeks, right? So the option market is actually not freaking out. It's not panicking. It says, expect continued turmoil given, the macro headlines, but both the VIX and other measures that we track in the option market are more contained than you would expect given the headlines.
But bottom line, and we'll let you go, Mandy, with this, is based on what you talked to us, some of that technical stuff that matters a lot, by the way, doesn't look like the overall selling is probably done.
No, we're not at capitulation yet. So this is a big difference.
When will we know? A 2,500-point down day, a VIX at 75?
So I think what we're tracking is the client positioning, and the difference between this sell-off versus fourth quarter of 18 is in fourth quarter of 18, institutional investors were selling their core holdings, stock holdings, and shifting to cash. What we're seeing right now is they're buying portfolio protection, they're hedging given the macro environment, but they're holding on to their core longs, selectively adding in certain situations. But certainly, this to us is more constructive than what we saw in fourth quarter of 2018.
All right, Mandy Xu, Credit Suisse. Good stuff, Mandy. Thank you very much. BK, I mean, you bought puts. It sounds like Mandy's clients, what they're positioning goes into your trade.
Yeah, I think so. I mean, today didn't feel like this was the bottom. I think there's just so much uncertainty out there that continues. And I think we have several more weeks of this before we get, hopefully, we get some kind of clarity. But remember, we've gotten hit on two fronts. It's not just the virus headlines, but it's also the oil headlines that you guys talked a lot about last night. That is another huge economic drag here. And until we get some clarity on that, it's going to be really hard to have a sustainable rally.